Today, we have rather Ming Lam from Trading Central. He's the senior analyst. Also with Ming Lam, we have Vincent Turcott, the director for Asia Pacific Sales at ICE. We're going to be discussing um, how investors can find opportunities in the market right now. Amidst the backdrop of the U.S. and China trade tensions. Where are the opportunities in the ICE Mini contracts? And here to tell us more about it is Ming Lam. But before we go to the segment, can we please have Vincent Turcott to tell us more about ICE SG?
Sri. Thanks very much, Sri. And once again, welcome to everybody who's logged in to take a quick look with us at some of the strategies that we're going to review tonight using some products that are listed here on ICE Futures Singapore. There's been a lot going on, obviously, and you can come back to it again and again, but the volatility in the dollar, certainly the accompanying volatility in the CNH, and some of the commodities, in particular Brent, have been spectacular and offered a lot of decent trading opportunities. Since our last webinar, we've actually had a couple of pretty good and very profitable trading ideas, and we had two that were losers, but we stopped out, got out of the risk, and we let our profits run on the third, thanks to Ming's trade ideas, and we ended up with a decent little net profit. But before we get going in this, I'd also like to thank Phillip Futures once again for inviting us on and allowing us an opportunity to explain to you some of the things that we're doing. Let's just take a quick look at some of the products we'll be talking about tonight. And first, a little bit about ICE. I'm not going to spend too much time on this. Sorry, there you go. I'm not going to spend too much time on this, but I want you to focus on this right here. We expanded in Asia, acquiring the old Singapore Mercantile Exchange, and we opened up ICE Futures Singapore at the end of 2015. And we've designed the exchange to be what we think is a substantial offering in Asia, designed for Asia Pacific investors with a distinct value proposition. And this is our value proposition. We built it with the idea that Asia Pacific clients want a trading ecosystem that is very accessible, has a low barrier to entry. So we have no fees for market data, no fees. We heard the objections that a lot of retail clients made when we raised the fees on our other exchanges. And so when we designed this exchange, we decided we would have 0 fees on it. We also use only cash settled contracts, and they're mini contracts. And this again is to be tailored specifically for retail investors, for people who are looking for easy access without any headaches around delivery. The exchange fees, as you'll see, are pretty low as well. So again, we want to lower the barrier to entry and keep the exchange as accessible as possible. And at the same time, it carries the same high quality infrastructure in terms of our technology, our matching engines, our credit capability, and of course, regulated under the MAS, a familiar regulatory agency to everybody here in Asia Pacific. Now, one thing I will say before we move on, if you want to see this market data, you have to tell your reps at Phillips. You can write them at at futures.com.sg. So futures@phillip.com.sg, and they'll let you see the data for free, and you can have it on your screen. So another brief historical slide. I mean, we're kind of proud of the fact that we built it up in a post-global financial crisis environment to go from in November of 2015, where we really only did a few trades, all the way to something a little over 2.5 million last year. Briefly looking at a couple of the products, we'll start with the mini US dollar index futures. And in trading, a lot of people like to use the dollar index rather than picking an individual currency pair, and there's a couple of simple reasons for that. Number one, when you have a lot of event risk, like for instance this upcoming G20 meeting, you don't know which one of the currency pairs is actually going to be the best performer. You just want to take the dollar against the world, basically. And so this trade allows you to take the dollar long or short against a basket of currencies that's remained very stable since the creation of the index. It's only changed once, and that was on the launch of the euro in January 1999, which is why you see the shift in the composition to 57.6% euro. Other than that, it stayed absolutely stable, and it's a very easy way to express risk, positive or negative, on the dollar in general. This is our quick update on our volumes in ICE Singapore, and as you can see, we're trading roughly 1,200 a day, and the 12 to 1,300 a day. And the monthly volumes, we set a record in May. We keep expanding, slowly but surely grinding higher in terms of the volumes. The right-hand chart is interesting, and we like to show this to give people confidence that they'll be able to trade the dollar index during the day in Asia without a lot of cost to getting into or getting out of a position. The spread is usually around 1 tick wide, and that's in $1 in the dollar index, $1 per contract. So the bid offer spread is very narrow and very well supported through the arbitrage that we get from the big dollar index, which is trading at the same time. So the arbitrageurs keep that market tight, but at a lower entry cost for retail. There's a quick summary of the contract specifications. Ming and I go back and forth about this a lot. The tick size is $1 per tick, but you can see it moves on a half a tick basis. And so you can see that it clears ICE Clear Singapore. It is block enabled. It has a 75 lot block minimum quantity. The contract size is 1/5 the size of the big dollar index. So it takes 5 of these contracts to trade the equivalent risk of $1 index on ICE US. But what we've done, as you can see, is we've lowered the exchange fee to 8 cents per contract, whether you use it on the screen or you trade it on a block. Now, to give you an idea of the savings there, 5 contracts times 8 is 40 cents, but the rack rate, or the fee to most participants in the ICE US dollar index, is $1.35. So you get a significant savings by coming onto ICE Singapore and using this contract instead through Phillip. We have a monthly report. It gives you a little bit of an idea of tracking the dollar index against some of the currency pairs, as well as against some of the commodities. And you can track the correlations as well as take a look at big picture charts with our monthly report. This is free, and we provide it through Phillip to any customer who asks. Quick look at our mini offshore renminbi contracts. Now, Ming's going to get over to this in a minute, but the renminbi has been dragged around by the dollar a little bit in this move. Just after the Bank of China said they wouldn't mind seeing it over 7, they weren't going to fight it, and suddenly the dollar goes down and it drags the renminbi with it. So it's an interesting trade right now to watch. Again, the volume that we see is very good, and it's bolstered by the other venues that we have to trade this contract. Trading on ICE Singapore, you again have a lower barrier to entry than you do on some of the other exchanges, and it's more accessible. The bid-ask comparison, again, you can see on the right-hand side of the graph that it's a tight spread all day long. I mentioned a moment ago the other venues for trading it, and I'm not advertising SGX or Apex. I just wanted to put this up here to show a little bit about how the prices in our contract at IFSG are supported by the other arbitrageurs. We have a high degree of confidence in the liquidity of this market, and there is plenty to trade it against. And indeed, most of the arbitrage that we see comes from a couple of market makers in Singapore who are using our exchange to take advantage of pricing disparities with the other exchanges. So we keep a tight market on ours, and when the other ones get out of line, we're able to trade it that way, with using our contract as a hedge against some of the others. And so some of the big banks and a couple of the big market makers watch this contract constantly for that. And again, the specs, the mini-CNH is a mini contract. It's a $10,000 contract. So that's 1/10 the size of a couple of our competitors in Hong Kong and Singapore. And it's designed for traders who are looking to get in at a low cost, relatively low risk and very low fees. As you can see, it's 2 cents per contract, screen, or block. That's it for me. I'm going to turn it over to Ming Lam now, who's going to review some of the trades that we've done previously. He's going to give you an overview of where we think the market's going and give you an idea of some trades to follow up on. Thanks very much.
All right,
Okay.
well, while we have Ming Lam coming on, if you have any questions at any point in time, please type them in the question box and Ming Lam will be addressing them progressively or right at the end. All right, so do enjoy the insights provided by Ming Lam and enjoy the webinar ahead.
Okay, thank you, Sweet of Phillip Futures, and also thank you, Vincent of ICE. And well, ladies and gentlemen, good evening. And well, maybe some of you joined our webinar last month. So this is today we have a part 2 of our webinar. Well, today, like the last webinar, I will not get into very theoretical. I will not get into a lengthy webinar. I will give you concise what is happening in the markets and with the focus of 3 major contracts that we are trading. All right. Okay, let's go. This is something about our company and Trading Central. We are mainly doing technical analysis research for on forex, on stocks, on index, on commodities. All right. Now, let's start today's webinar. All right. So, what a spectacular month for the past month. We have a lot of dramas going on. Now, I'm going to list to you 3 major events that are causing waves, substantial waves in the market. First of all, I would like to point out this U.S. Federal Reserve. They hint that they will cut rate in the coming months. Okay, most probably in July. Okay, the Fed say we will act as appropriate. Okay, you know the direction of the future interest rate move will be done. And well, some of my friends say that the next move will be 50 points. And let's see. All right. So this one is huge, and you can see that. Well, markets. Some basic about the market. Markets trade. The traders, investor trade on expectation. When they expect the Fed to cut rates, they will trade accordingly. That's why you will see the move in the stock market and the move in the US dollar. And I will lead you to have a look. And then this one is also interesting. We have something happening in the Middle East. The US against Iran. All right. Well, some 2 tankers, Japanese tanker, caught fire in the Middle East, the Strait of Hormuz. Okay, and some days later, U.S. drone was well shot down. All right, and after that we can see a huge move in oil and also in some precious metal, gold. Don't worry, I will talk about oil, Brent, and gold in the later part of this webinar. All right. And what is the third things, third event I would like you to get your focus on? You know it better than I do. Yes, the coming G20 summit in Japan, Osaka, in the coming Friday and Saturday. Well, I think most trader and investor are watching clearly if there will be some trade deal or agreed between the presidents of the US and China. Okay, we will also talk about this later. All right, so you see all these things happened in the past month. All right, it was exciting, spectacular, and eventful. And let's see how the market react. Okay, I would talk about first of all, when we talk about financial market, let's look at the U.S. stocks. Okay, now this is the exact chart that I showed up in the last webinar. That is 1 month ago. At that time, we were bearish on U.S. stocks. This is the Dow Jones Industrial Average. Okay, we say the index will hit 25,200 on the downside, and then 24,825 on the downside. In fact, it did hit those levels and then post a rebound. And then now this is the latest chart on Dow Jones. Okay, and at that time, last month, I mentioned that in a normal bull market, a pullback of 5 to 8% is normal. Okay, we call it a consolidation. Well, in fact, the last consolidation, well, okay, it spent 7%. It dropped, the index dropped 7%, and then it rebound. Okay, up to now, the rebound is up to 8%. Okay, we are looking closely at the previous high. The Dow's previous high was made in October. It was at 26,800, something like this, 26,800. If it cross above this previous high, we expect it to take off from there. All right. So now this is the updated chart of the U.S. stocks, and that, as you know, the global stock markets most of the time follow the U.S. stock market. Let's see. Now this is Japan, and it confirmed inverted head and shoulder pattern, shoulder, head, shoulder, and then boom, it was up again. We are bullish now. We are bullish on the Japan Nikkei 225, and this is the technical chart we have. I'll remind you, the Brunei, maybe some of you ladies and gentlemen are the first time to join our webinar. I forget to explain to you the use of Trading Central charts. Now, it's very simple. Let me repeat here one more time. The Brunei is the fake Brunei horizontal line is our pivot point. Okay. If the current price, this one, is above this pivot point, we are bullish. It means we are bullish on the market. And green, the upside target are indicated by the horizontal fake green lines. These two are upside target. Okay. When the index touch or falls below this pivot point, this blue line, it will proceed to the downside targets. Here are the red lines. Okay, these two are our downside targets. Okay, inside the chart we have some thin lines, curve, not very straight line. You can see that the red line is maybe you know it better than I do. It is moving average, 20-day moving average, the red line. The blue line is the 50-day moving average, and the green line, thin line, is 200-day moving average. This, and then we have outlaid on the bottom of the chart, we have RSI. Okay, relative strength index. Okay, we go on, and I will tell you how they can be used. Now we have Japan, we have Hong Kong. Now Hong Kong also, like the US stocks, the Hong Kong index rebound strongly lately, but these 2 days, these several days, it shows a little bit tired. Okay, you can see that, and today it dropped over 1%. This is because we are, as we approach the G20 summit on Friday, and people, investors, just become cautious. Okay. Currently, we are still bullish on this index. Maybe you are interested in also Singapore's index, Straits Time Index. Okay. On the chart, we can see that it is a daily chart. Okay. we can see that Singapore index is holding up firmer than the Hong Kong Hang Seng Index. Okay, it's up all about, now it is currently at levels above all those 20, 50, and 200 days moving average. And the relative strength index, RSI, is above the 50. We call the 50 a neutral level, neutrality level. Above that, we have high momentum. Okay, below that, we have downward momentum, something like this. Okay. Okay. Now, as you can see, the U.S. stock market just rebound 8%, as I said. Well, the main cause we believe is the Federal Reserve hinting that it will cut interest rate. Okay, this is currently the single major force that pulls the stocks. Okay, now how about currency? This is a euro against US dollar. Okay, you can see that it has already jumped up to levels above the 200-day moving average, and the outlook, short-term outlook, represented by a daily chart, is turning bullish. Okay, we are bullish on euro again after quite a while. You can see that, well, for a long time, for nearly a year, you can see that euro against US dollar has posed a lower high. We call it this high is lower high, and also here. The trend was very bearish at the time, but now, as you can see, the price has jumped over all those moving average, and I want you to have a look at this thin line, 20-day moving average. We call a 20-day moving average crossing above the blue line, the 50-day moving average. We call it a golden cross. Okay, we turn bullish on this one. It seems that it has a potential again to cross above the 200-day moving average here. Okay, and also the relative strength index is 68, and well, upward momentum, we can say that. All right. Now also pound, dollar, British pound. Okay, also has posed a very strong rebound. However, we are looking at 1.28, 1.28 this level. If pound rise over this level, we will turn the short-term bullish again. We call this a key resistance, 1.28. Okay, we have seen that the UK has undergone a rather interesting period when the Brexit drama go on again and again. And currently, we know that they are the ruling Conservative Party is choosing their next leader. And I think after the leader is selected, the pound will be bullish again. Okay, let's see if it can cross above 1.28. Okay, I would want to get you to another currency, yen, dollar yen. We call it dollar yen. Now, in technical analysis, we always like to find some pattern. This is a very classic pattern. We call it a bearish channel. Okay, or you can say a declining channel. From starting from March or end of April. Okay, the dollar yen has been on a downtrend. Okay, we have a wave of lower highs and not very good. And you can see that also the 20-day moving average is capping the upward potential of the currency pair. Now we see that if it drops below 106.7, next target we are looking at 105.25, and you can see this time the RSI is very bearish and is below 50. Okay, it's below 50 and even below 30. Now 30, we say it is an oversold level. Okay, below 30, it is also oversold, but don't expect that if it has reached a status of oversold, it will rebound immediately. No, it will stay. Sometimes it will stay as oversold for a long period. Okay, so we can see that at the moment we can say that there is no upward momentum for this currency pair at the moment. Okay, so I want to show you the last currency pair for today. Australian dollar against US dollar. And we have not yet turned, just like the British pound, we have not yet turned bullish on this currency pair. Well, if this currency pair is above 701, this private point, we will then turn bullish. But now we are closely watching it, and as you can see, is a rebound is not as strong as the euro. Do you know why? Do you know that well, as trader, we always term this pair, Australian dollar, US dollar, as a proxy to one thing. Yeah, maybe you know it. I mentioned it last time. We say it is a proxy of China. If China is not doing well, is doing well, this currency pair will rise. If China is not doing well, well, it will also show weakness. This is what we are seeing. We are seeing these days. Okay, it has a rebound, but not as strong as euro and okay, something like this. And okay, this is the currency pair I want to show. And one more question regarding currency is quite interesting. Now you see US dollar is falling hard for these several sessions. Okay, we say that we expect interest rate to drop. Okay, do you think that the US economy is getting worse? And how about the Eurozone economy? How about the UK economy? How about the Japanese economy or the economy in Australia? All right. So we say that well, as I mentioned at the start of the webinar, well, we are trading expectations. Okay. It doesn't matter if the Eurozone's economy is worse than the US economy. Once we know that the US has a high potential to cut rates, well, traders and investors just escape from the US dollar. Okay, so if you want to trade forex, you get to be fast. And mind you, one thing I want to mind you, I just looked it down. The European Central Bank of the Eurozone has also, like the US Federal Reserve, the ECB has said that it also has a high potential to cut rates. Okay, so mind this. So now I want to go to some interesting things that the trade ideas we mentioned last month. Okay, and we as always we are mentioning 3 trade ideas on 3 major contracts issued by ICE. Okay, we are going to talk about US dollar index futures. We are going to talk about renminbi, Chinese yuan, okay, futures, and also Brent oil futures. Now, first of all, here's a recap of what we suggest last month. Okay, and at the end of May, we mentioned that we are bullish. We are bullish on US dollar index. At that time, we set stop loss at 97. That means this horizontal bull line. Okay, that means if the index hit this level 97, our trade position will stop. Okay, at that time our entry point is here, and we trade 5 contracts. Okay, and well, at the end, it really hit 97, and now it is 95 point something. I will show you later. And so our position make a loss. Okay, we stop it. Okay, and have a loss. Now, remind you, for this contract, a tick size is 0.005. It's 1 tick. It's $1 US. Okay, 3 decimal place. Okay, you can see that the index has 3 decimal place. Okay, this is the trade idea last month we submit. Okay, now what's the next one? CNH. CNH, it is US, now in fact it is a US dollar against the Chinese offshore yuan. We call it CNH mini futures. At that time, we were bullish on this currency pair. However, at that time we also spot that this currency pair is a little bit toppy. It means that it seems like this pair is going to make a top and reverse. So although we were bullish on this one, we set a very aggressive stop loss here. And well, maybe you know that it turns south to the downside and hit this stop loss at the moment. Okay, we make a rather a small loss at that time. Okay, we trade 2 contracts at that time. And then the third one, Brent oil. Now, Brent oil, I would like to show off a little bit. We suggest this trade in 3 occasions. Okay, in February last month, and also later I will show you our trade idea. This is the trade idea we gave in February. At that time, it showed a very classic reversal pattern, we call it. It is called inverse head and shoulder pattern. We advise an investor trader to long this contract, and with a target, with a Brent target at 71.15 US dollar and 75.1 US dollar. This is the 2 major targets we set, and luckily it really hit both targets. And in May, we saw another pattern that kept us on alert. The pattern was a double top pattern. Okay, we spot a double top pattern in May, and we mentioned it in the webinar then. Okay, we also see that the moving average, as I mentioned before, the 20-day moving average is about to cross the 50-day moving average. Okay, so we saw it as a warning signal, and then we suggest looking short for the contract with a target at 67 on the downside and 64 on the downside. We also raised a third target at that time at 59.5. Okay, and luckily all these 3 targets were hit. Okay, so now we are in June. What should we suggest? We suggest this one. Now we talk about Brent first for this month. So for this month, we see that it hit a bottom at around the 59.5. Okay, we see a double bottom here. Okay, last month we saw a double top. Okay, and this month we see a double bottom. It means that maybe it has hit its bottom already, and we are looking north to the upside. Okay, now for example, we suggest trading 3 contracts here. Look at the table. Our stop loss is 62.2. So our current price is 65.48. So if you take 3 contracts and the price if the price hit the stop loss at 622.2, we will stop loss and take the loss. Okay, on the upside target are now set at 70 and 73. Okay, 70, it is, you can see it is a overlapping level of support and resistance. Okay, and also 73 is a previous top. We expect Brent to revisit its previous top, simply. Okay, so this is your stop loss, and these are your upside target. And now we turn to the upside. We turn bullish on Brent, mini Brent futures. Okay, next one. How about US dollar? Well, I want to explain to you the chart first. Quite ugly. We in theoretical term, we say that the technical configuration of this mini US dollar index futures, USDX futures, the technical configuration has been damaged. Why? 2 points. First, the price, the index has dropped to levels far below the 200-day moving average, the green line. Okay, it is a very bad sign. And also it has dropped below a long-term rising trend line, this one. Okay, and look at the red line, the thin red line and the thin blue line. We have a 20-day moving average crossing below the 50-day one, a death cross. Okay, a death cross in terms of traders. Okay, now we set our pirate points, our stop loss points at 96.95. Okay, here. Okay, if you like before, if you trade 5 contracts and the US dollar index, in case it return back to above to the stop loss, we will take a loss of $1,500 and then we stop it. Okay. However, on the downside, we are looking at these three targets. They are 95.17. Well, it is a previous low in March. And then we have second target at 94.635, this one. Okay, it is a previous low in January. Okay, in fact, it is the low of 2019 so far this year. Okay, if we hit both targets, then it will be trouble. It will be trouble. We will see the third target at 93.9395, this one, which is the previous low in September 2018. At the same time, the third target, 93.395, is a 100% Fibonacci extension from the top. Well, maybe I will explain to you later if the terms of Fibonacci numbers. Well, Fibonacci extension number, these are all tested number with ancient history. Okay, it's quite interesting, and let me explain to you if you have time. Okay, so now we have turned quite bearish on US dollar. Okay, as you can see. All right, so remind you, for trading this contract, the tick size is 0.005, $1 US. Okay, now how about the US dollar against the Chinese yuan? And as you can see, the drop in the US dollar against other currency is quite extensive this time, and we rarely see this kind of drop for the past 6 months. Okay, and now we set up our pirate point, our stop loss point at 6.91. Okay, we are bearish on US dollar against the yuan. Okay, on the bottom we are looking at 6.82 and then 6.76. This one, the second target, is a previous key resistance. As you can see, back in March, February, March, April, and May, and it was a key resistance for the currency pair. Once broke above this key resistance, the pair just took off. And now we expect that the currency pair could target this level as a second target. Okay, these are the three trade ideas I'm going to give you today for these three major ICE mini futures. Hope you will like it. Okay, and I know you would be very interested in one particular asset. I have prepared it for you. It is gold. Okay, gold. Back in May, we say that we are not yet bearish on gold. We keep our bullish stance back in May on gold, saying that the level, key support level, is 1,270. Okay, we kept that position, and what happened since then? It just took off. Okay, and now it is challenging the next whole number will be 1,500. Well, as you can see, several ingredients are very good recipe for the taking off in gold. We have the weakness in the US dollar. We have geopolitical uncertainty, tension, dispute between the US and Iran. And these are all coming together to propel gold to the upside. Okay, so just look at those events, just pay attention to those events, and it will help you to trade gold. All right, next we have I remember last time a member of the audience asked me about this one, the US Treasury price and US Treasury yield, and I didn't have that yield, have that chart at that time, and this time I have prepared it for you, and you can see that the technical configuration is very ugly. Okay, the 200 days, the 20-day, 50-day, 200 days moving average are all aligned for a very bearish view, and you can see the RSI, relative strength index. I told you before, if it is oversold, it keeps to be oversold for a period. So this is not bond price, this is bond yield, the 10-year US Treasury yield. We expect it to develop below 2%. Okay, 2%. All right, it is now struggling. As you can see nowadays, for this 1 or 2 sessions, it is struggling along the 2% mark. And well, we are bearish on this one. Okay, the key resistance is around the 20-day moving average. Okay, so I'm nearly coming to the end of my webinar, but one more thing, if you allow me to talk about. I want to talk about this in 1 more minute. So everyone is expecting to watch closely this event on Friday and Saturday, and I can tell you, nothing else is more important than this one in the eyes of trader, investors, government officials, something like this currently. Okay, at the moment. Okay. We are not full-time political analysts. We are not political professor. We are not political PhD. Okay, but we as trader and investor, we just make close observations on things, on events around us all the time. And well, we can see that on the G20, there could be three outcome between China and US. Okay, we could have a trade deal. Okay, if we have a trade deal, well, no doubt, stocks will take off. Okay, I personally, I want to see a trade deal so that I can suggest people jumping into stock and take a ride from there. Okay, but however, in view of those events taking place recently, and in view of the Donald Trump's administration's handlings of the Chinese firms, we expect that a trade deal to be less likely, frankly. Okay, to be not very likely. Well, although personally I want it to happen, I want to see a trade deal. Okay, so the remaining events that results that most probably will come out is a ceasefire in our point of view. Okay, the US may say, hey, okay, we suspend tariff for 90 days and then we keep talking, something like this, or and they will intensify the trade war by increasing tariff right in July. Okay, so this our little bit analysis on this event, and hope you will like it. So the following time, I would like to see if you have any question that you would like to ask.
Ladies and gentlemen, thank you so much for Ming Lam with his valuable insights. Now's a great time to fire away with the questions and let Ming Lam address each and every one of them. If you have any other trading related query, fire away in the question box right now. If you're wondering when you trade ICE with Phillip futures, we do not offer. There's no fee for market data charges. So if you have any other queries related on ICE, we have Vincent available as well if you have any exchange related questions.
Yes.
As usual, this webinar is recorded, so we will have a recording available for you to review what was covered in the webinar. Let's just give a few more. Sorry, let's just give a few more seconds for our attendees to fire away with their questions if there's any, and if not, let me just let's give it a few more seconds, shall we?
All right. Yeah, regarding Sweet, can I talk a little bit?
Go for it, Ming Lam.
Yeah, ladies and gentlemen, well, regarding the most important event in front of us, the US against China trade deal or trade war. Well, nobody can know the outcome. unless unless you are very close to the presidents, both presidents. So what should we do if, as trader, well, we set stop loss as shown in all our trade idea and all our charts. We have stop loss. Well, in case well, you make a trade before the outcome. In case it turns out to be against you, your stop loss protect you further loss, protect you from further loss. Okay, and well, and at the same time, if you're cut, you have stopped it for your trade. Maybe you can on the other hand trade the other side and follow the trend, and at the same time set a stop loss all the time.
All right, Ming Lam, we have a couple of questions from you. The first is from Mr. Jack. He is asking, can you tell a little bit more about pound versus the US dollar?
Okay, let me go back to pound and here. Yes, here. Now, you see, although we have seen a very strong rebound in pound, okay, we are still looking closely at the key resistance, or you call it the stop loss. Now we are taking a bearish trade. For example, your stop loss will be at 1.28. Okay, now you can see the pound is still captured by the declining 50-day moving average. Okay, this is one of the reasons why we are still not yet bullish on this currency pair. Okay, but on the same time, if the pair at the same time, if this pair really cross above 1.28, we will turn bullish again. Okay, otherwise, well, we will spend some time consolidate and then dropping below and revisiting its previous low at 1.253, something like this. Okay, yeah, Pi is a little bit tricky all the time, but when we look at the moving average, okay, we are confident to say that, hey, we look at 1.28. Okay, unless this level is broken, we keep bearish. All right. Thank you.
All right, Ming Lam, there's one more. This is from Steve Holloway. He's
Yes.
asking which platforms are available for trading on ICE SG. Looks like that's a question for me. Well, in terms of platforms, we have several platforms which you can use. The popularly used platforms with Phillip Futures are Poems, Phillip Nova, as well as Poems Professional. We should have access on CQG as well. If you have any other queries on getting started with ICE just drop us a note at futures@phillip.com.sg and we'll get in touch with you.
Yeah.
So, are there any more questions before we end this wonderful webinar? Thank you for being an amazing audience as always. And stay tuned for next month's webinar and we'll get in touch with you. Jack has a question on the transaction fee for Forex in Poems. Transaction fee, that's the bot rate. Just give me a second. Let me pull out the figures for you. All right, Mr. Jack. Okay, we have the usual rates for forex on poems, if you're trading with poems, is $8. But if you prefer, that's you may be able to trade zero commission FX with us as well through our wonderful new MetaTrader 5 or Phillip FX 365. So options wise, you have several to choose from. So just drop us a note and we'll get you started. All right, just before we end the day, thank you so much once again. If you have any other queries, just write in to us at futures@phillip.com.sg. Meanwhile, this video is recorded, so we'll send the link over to you so you can revise what we have covered today. If you have any other queries, feel free to write into futures@phillip.com.sg. Jack, I hear you. We'll get in touch with you and link you up with MZ5. All right, meanwhile, have a good night. Look out for our next webinar. We'll send you details on these contracts as well so you can learn more about them. And if you want to get started, just write into us at futures@phillip.com.sg. All right, good night, ladies and gentlemen. Thank you so much, Ming Lam. Vincent, have a
Thank
good
you.
night as well.
Thank you very much. Sweet. Bye-bye.
Bye bye.